One of the things we do at this One Rental at a Time channel is we actually have a very private Facebook group for students of the course, How to Get Started One Rental at a Time, which Dion is not only a member, an active member, but also a contributor to. And occasionally we take questions from the group because we think it would help a lot of people. And today is one of those days. Dion, how are you?
Howdy, I'm doing marvelous. I'm actually looking forward to this. I saw a question in the Facebook group, and I thought it would be a great chance for us to give our opinions on it
Yeah,
here instead of just there.
exactly. So I'll give you the basic question. This is from Michael. Michael is looking to put together a deal in Central Florida. He has line of sight to a sixplex from a landlord who is tired and wants out. The landlord is interested in seller financing, but Michael is saying, hey, how do I value this thing? Any advice would be helpful. So, Dion, if you got a question like that from someone, what would you say? I'd love to get your thoughts on it first.
So I'm the lazy investor. All of my deals are from the MLS, conventional loans, doing my first rehab now, which will be my last rehab. I have a seller financing pitch letter that I submit with my offers based on information I've learned from guys like you and Matt. And so when I see a question like this come up in the comments, I made a huge mistake early on with Bigger Pockets, and I'd see a question in the forums, and I'd give an answer. It would be something simple like, what should I use, FHA or conventional? And I'd give a completely uneducated answer at the time, and then I'd get pounced on by people who knew what they were talking about. So I knew that before I answer something, I have done a ton of research. I've interacted with people who've done it. So when it comes to something like this seller financing here, the owner in this question, he says the owner has expressed an interest in seller financing. I think that's over 50% of it right there, right? You have to find somebody who's open to it, because not only do some sellers not know what it is, some agents are going to try to step in and go, oh, you can't do that, it's illegal.
Yeah, it's illegal.
They will say it's illegal. And some agents are doing it to protect it because they think it's a really cheap person trying to buy a property where they can cut out their commission.
Yeah.
So in this case, for Michael, on the question of how do you evaluate the property, I don't know that that's the right question to start with. I think the right question for me to start with is what matters to the seller. Right? It's just to steal a page right out of Matt the Lumberjack Landlord, and he says, find 3 things that matter to the seller in any transaction, whether it's from the MLS, conventional seller financing. What is the seller looking to do? Do they have a number? I've heard you brag about, not brag. You bought a property for 0 interest because the seller wanted to be able to brag about the price, the number he got. So is the number what matters to this person? Is your ability to close what matters to this person? Do they need if it's a sixplex, they're probably not house hacking, but I would often want to know, do they need a place to stay for 2 to 3 months while they get the purchase figured out after their sale? Is it consistent income? Is it a note that they want their family members to be able to inherit? Because one of the things to look at with my portfolio is currently my kids haven't got on the property ladder. They, there's no way dad can know anything. There's no way it can be right, even though I get to retire and do whatever. So I don't think that they're going to be set up to inherit properties, but they can inherit a note. A financial instrument that gets them payments. And so figuring out from this seller what they're looking to do, and then making sure that it's all in all salesmanship from the very beginning. Here's the premise: create the dream, then show how you're the path to the dream. Until you know what that person's dream is, you don't know if you're going to be giving them information they want to or need to hear. And so before I would tell him, here's how you evaluate the property, I would say, here's how you need to look at how you're going to need to evaluate the property.
I like it. So one of the things about this is I've done deals just like this, I haven't done a sixplex. I did an 18-plex just like this. And I understand why new investors are like, how do I comp it? Because that's very much a residential game. Commercial, which again is arbitrarily 5 units and above, is based on the building. Now we're doing a seller finance deal. But my logic stays the same. So I'll just give the rough outline that I would use for deals like this. So step 1, I want to know actual rents today. Let's make up a number. Let's say it's $6,000, just $1,000 a unit. I have no idea what it is. So if rent today, actual, we're talking actual, not pro forma, not this, not that. Actual rents today is $6,000. I would want the agreed upon payment to be 40% or less of that number. Because I operate buildings like this, I know it's difficult to operate for less than 50% expenses, and I want to have a margin of safety of 10%. I want actual cash flow. So that's where I start. It's great that this seller is interested, but I need him or her to know that in this case, so 40% of 6,000 is 2,400. Just so you know, I can't pay you any more than 2,400, and I would probably start at like 2,100 so I can negotiate up a little bit. And then I would explain why. Oh, by the way, when I buy this, my taxes are going to go up, my insurance, I'm going to have to do just all of these things, right? And that's going to be my real test. Some people talk seller financing and they have these dreams of, in this case, $4,000. I can't operate the building. Positive. It's an alligator day one, no matter what. If you have a mortgage payment on this deal of $4,000 and the building's only 6, you're going to lose money. So that's where I start. And then at that point, if we can get the seller in this case to agree to say 2,200, to your earlier point, I don't care what the price is. I really don't. I don't care. My payment is $2,200 a month. I'm going to be cash flowing hundreds of dollars, if not thousands, once I pretty it up. So that's where I start. Then step 2 of this is I got to go inspect the units, because many times when I've done these deals like the 18 unit, you go in expecting bad and it was worse, at least in my case. So, we need to make adjustments. In that case, we got, the price went down because I said, dude, you in this case, the seller went through it with me. So he saw it also. And I'm like, well, you told me this was basically move-in ready. It's not. My rough estimate after 20 years or 15 years of doing this is I got $100,000 I got to pull out of my pocket immediately. So guess what? You're not getting that $100,000, right? The price just went down and the payment went down a little bit. But in this case, the seller, it was all about the payment for him. So we came to an agreement. I got a great price. I've owned the building now a decade or 8 years, and it's tripled or whatever it is. But for me on buildings like this, it is always about the payment. If we can get to a basic structure of 40% or less, I don't care about price. It's not about a comp, frankly. That's what I think.
Well, I think the benefit too with 6 units, for regular conventional lending, as soon as you go above 4 units, you start hitting DSCR loans that have a loan revaluation period, and they're asset based.
Yep.
So a lot of times people, when they're talking seller financing, will speak into existence things that they don't need to, like a balloon payment.
Yeah, good point.
Right. I've heard, because so many times people talk about, oh, I've got the seller financing thing. That's great. My balloon payment is 5 or 10 years from now. Well, in the case where the person's open to it, unless they suggest a balloon payment,
oh yeah,
why would you bring it? Fixed rate debt, 30 years, 40 years, 15 years, whatever they will agree to, as long as it's fixed rate debt, would be really important to me. There are some companies like Convoy Home Loans that had the fixed rate 30 or 40 year up to 8 units, but it's not common. Right. Most lenders, as soon as you hit DSCR, they're going to have the other things, and you can skip that with seller financing, as long as you're not the one presenting it.
Yeah, no, absolutely. Again, I think a lot of people negotiate against themselves, and you're absolutely right. One of the most common things I hear people talk about in seller financing is they're pitching a balloon. Now, it may be important to the seller, back to where you were. It's like, hey, I'm 83 years old, and I don't think I'll live past 10 years, and 10 years is all I'll give you. Well, okay, great. Then that's important to the seller. But if they don't bring it up, I mean, my first offer in this case would be 35% of actual rent, fully burdened 30-year note, whatever price we come to. And again, the price in this case to me, Dion, assuming I want to keep this building forever, is almost meaningless, right? If you want a higher number, great. Guess what? The interest rate's lower, right? I mean, this is a math formula to me. So that's how I attack situations like this. And I think we're going to have more and more opportunities like this. I think if you saw my daily financial news this morning, we have a 52-week high in mortgage rates and going higher. So again, the market is going to slow down, and some people want out.
And I love how the high interest rates are going to make the Crash Bros make a bunch more videos, even though 60% of markets right now are at record highs, right?
They
So
can't
there's
they can't wrap their mind around the fact that transactions and crashes and transaction crashed, but prices didn't. They it just rattles their brain that they don't get it. But what can I do?
And then three other quick things to cover here for Michael asking this question. So thanks for
Mhm.
asking the question in the One Rental at a Time Facebook group.
Yep.
It sparks these kind of conversations. The first thing is, are there agents involved? If there are
Mm.
agents involved, make sure that you make them comfortable
Mhm.
that you're going to make sure they get paid. You're not
Yeah.
going to try to skip out on their commissions, because if they get the sense that they might not get paid, they're going to be poison in the ear of the seller. So that's the first thing,
Mhm.
is if there's agents involved, make sure they're comfortable and they know that your goal is to make sure they get paid. Second, is there any remaining debt on the property?
Mhm.
Your down payment might need to cover that debt, which is where some things like the 50-40-10 come in. When there's a bunch of debt that has to be taken care of, you can go get a 50% loan to value from a regular traditional lender to cover the debt, the down payment, the um, agent fees, and then finance the rest through the seller at a better interest rate. And then the last thing is, how much money does the seller want to walk away with? Right? If they're trying to do this because they kind of want to avoid the capital gains hit, sure, they don't want $500,000 in cash all at once, but maybe they want 50,000 to buy that RV now that they're retiring, or something. So if you can satisfy those three things too, in line with how much should my payment be versus rents. And then the last thing to wrap up with is, I think it's good, Mike, that you approach it from what are current rents, right? When you're buying something like this, I think that's your best negotiating standpoint. When I'm running the numbers, I use the binder strategy. So what I'll do is I'll go, here's what current rents are. Completely ignore pro forma, however you say it, which is translated as made up BS, right? And you know what rents currently are, but I would go, what are market rents? And then go about 10% below that. Because I've seen times where a tenant had a really nice looking lease for a full year.
Oh,
I
yeah.
thought, that's a great rent. If I could buy, it's a great place. But their deposit was wrapped up into their first months. It wasn't written anywhere. The tenant just knew this. And so next year they expected their rents to come down about $200 a month.
Yeah.
So whatever the current leases are, if compare it to what your knowledge of the market is, and are those in line with, or significantly lower or significantly higher than what you should expect. And then I would add a cushion of going a little bit below what market rents are when you're running those numbers.
Love that. The last thing I'll say about seller financing, in my opinion, is assuming you are a landlord and you are going to want to keep this property for a decade or more, focus on the payment, because the payment is what will allow you to keep the property. It will allow inflation and good management and good operations to increase your value. It is not about price. It is usually about terms, in my opinion. So, Dion, where can people find you?
Right here on YouTube, Dion Talk Financial Freedom, and in the One Rental at a Time Facebook group.
Yes, tag him. Mike, thank you for the question. Folks, if you are in my private Facebook group because you are a student, know that if you post questions, Dion and I go fishing there for topics. So thanks, buddy.
Yeah.